Before we move on, I kind of just want to touch a little bit again, very briefly, on the idea of, how those, protected ranges, those swing ranges are formed with those sweeps of liquidity, and kind of how that, the difference between high resistance and low resistance liquidity. So, just like we're doing on GU and the forex, but here we're just on the daily on euro dollar, like very often when you get that strong protected low, what does it do? It grabs the liquidity below that low. Just kind of loosely go through this bit. Right, we come here, we kind of form those obvious equals, and then we big grab liquidity, and then we get that strong movement away, okay? I mean, not everything's obviously going to eventually hold, depending on more time frame analysis and everything that's going on, but very often you'll see before that next strong sort of move can go, what does it do? It grabs the liquidity below that low. Again, quickly going through some examples here. We get kind of the overall push down, but it grabs liquidity within that leg to then fuel that next movement to the downside. Then we come to the upside, it just sweeps liquidity behind that high by a pip or two. This one's really, really subtle to see, but I promise you it did just sweep the high there. And then we get the movement to the downside. Again, right, we get the pull back up. Like very often, you're not just going to get like price break a swing low, it comes back up. It's not just generally going to come up with one move and then just come down with one move. Like usually that first pull back up into here, it entices those early sellers into the market, then it grabs liquidity, and then that's usually when you get the movement. And it will usually, just have what we call like low resistance liquidity at the low to target, and then it leaves high resistance, or that high resistance liquidity is taken. So essentially what that means is, you've got just all of that liquidity there sat below those lows. That would be a low resistance low. A high resistance low would be like if the low formed where you got something like this, right? And then it grabbed the liquidity like that. So now if we were, pro trend and we're targeting that low, this one's probably going to be a bit more sticky because there was obviously a bit more, liquidity grabbed in this move. So potentially there was institutional involvement in generating that low. Sometimes when that happens and you get something like that, you can get price come in and it has like a much deeper pullback before we get the real movement. So kind of show you examples like, like here, we get the movement down and then come up, we build all of this liquidity for November and December, grab all of that liquidity, and then we just have all of this low resistance liquidity like this, right? Like trend line liquidity to target. And that's usually why you see that impulsive movement. All of the demand in here is all being absorbed, right? All of these mitigations. Like, so when price comes down, there's just a vacuum in price almost. There's no real demand to absorb price. And then you get that sharp movement to the downside. More examples here. Like I said, right, price doesn't just come back up and just go. Usually you get another movement like that, then it sweeps liquidity, then we come down, pull back into the sweep POI, right? And then we get the impulsive movement there to the downside. Another example here, right? Sharp movement down. There's no sweep liquidity down here. We just get that pullback and then we build some more liquidity, grab the liquidity behind those highs, right? Mitigate the decisional flip zone there, right? That flips the demand here, pull back into there, and then we go. Again, get a break, but we don't just like go down, we come up, come down, grab the liquidity behind the high, fuels the next movement to the downside, right? Let's see what else. Like even back here, okay, this one's a bit more because you do have a bit more of a significant pullback there. So potentially, there's somewhat of liquidity used, a bit more of a protected low came in, and this is where it was tricky because, market's not always going to be super easy to read. Like I remember when back here, I wasn't sure, is that going to be like the true daily break of structure? Are we now shifting bullish and are we going to see this movement? Or, is that just an internal break and this is a larger movement? And that's where you can kind of play both sides of the market, right? Look for the shorts when we come into here, we get the pullback, sweep of the liquidity, break of that low. Now you've got a sweep POI to look to get short. And potentially we can target this low, but then we've also got this potential low here. And this is where you can trade both sides of the market. But as we can see, right, we have that impulsive movement down. And then this just doesn't really go anywhere. It's just corrective, building more liquidity. Sweep of the high, fails to move, get another sweep of the high, and then that's enough to fuel that movement there to the downside. And then, another example of like it just leaving a low resistance low, right? There's no real sweep of liquidity, right? We don't come down, do this, like get a strong sweep and then start putting back. It's just we come in and then we just come back, right? Build that liquidity, grabs the liquidity, mitigates the previous decisional flip there, and then we get the movement in, right? Corrective movement. So this is a bit more, again, where we could, okay, potentially maybe we're going to get a sweep and go higher. Ends up not being the case. This is a bit more tricky to read. And then we end up shooting to the downside again. And then obviously eventually then we start to shift bullish as the trend comes to its eventual end. These sweeps are a bit more clear on the lower time frame on the 4-hour chart. Not going to dive into all of that now. And then we eventually move to the upside. And like I was saying on GU, right, what do we get? We get a movement in, grabs the liquidity below that low, fuels the next movement there to the upside. Same thing, right? We pull back here, grabs liquidity below that low, fuels the next movement to the upside, okay? So you can start to, see how that forms, and it can just sort of help you to understand the flow of the market.